Hi, everyone. I'm going to go ahead and get this training started and just kind of get going with things. First of all, happy Thursday. Who all is excited about going into the holidays? I love, love, love Christmas. If you can't tell from my earrings, I'm all about the Christmas thing. So I'm super excited and ready for Christmas to be here. So I'm Lindsay with Grow Nebraska, and this Thursday's webinar is presented by Cory Morris, and he is going to talk to us about did we win this year and the bookkeeping part of things. And so I'll let him take this away in just a minute, but before we get started, I have a few announcements. This month's featured sponsor is Peter Kiewit Foundation, and we really appreciate their help. Without sponsors, we wouldn't be able to do all the great things we do here at Grow, so we always want to give them some thanks. This month's featured member is the city of Minden, and they are nicknamed the Christmas City. Very fitting. They have a wonderful lights display downtown. They've been a Grow Nebraska member since 2020. And so that's pretty exciting. If you get a chance, go down there and see their lights. So we're going to go ahead and let Cory's presentation run here. During this at all, if you have any questions, just go ahead and pop them in the chat. We'll address them at the end, but I don't want anybody to forget. I know when I'm in presentations, sometimes I'm like, oh, what's going on? Or what's this? So just put those over in the chat, and then Cory will address those at the end. We'll have just a Q&A portion. If you have more questions at that time, you can ask, but if you leave them in the chat, that way we kind of know, and then nothing gets forgotten. And then we'll just go from there.
Hey, Grow Nebraska, Cory Morris with Morris Better Bookkeeping, bringing peace and joy to small business finance. I'm excited to do our presentation today. It doesn't feel like it, but it is getting close to winter, the end of the year, and wrapping things up. Let's talk about our topic for today. Did you win in 2021? Okay, so first let's start off with how was 2021? One thing, I know this is a bookkeeping meeting, but it's never really just about the books. The books are just simply an indicator of your business and your vision and how you're getting there. The financials just tell the story. That's all they do, is they tell the story of your business. Okay, so 2021, what were your goals? I want you to think about that for a moment. When you started a year ago almost, what were your goals for your business? What were your goals for your life? Your business should serve you, not the other way around. What did you want your business to do for you? Or what good did you want to do with your business? What were your goals? Okay. Next question is, did you achieve them? There's still time. It's beginning of December, middle of December, so there's still some time for you to work on it. But did you achieve those goals? You set out with a vision this year, something that you wanted to accomplish. And if you didn't, then start that right now. What is your vision for the rest of the year? And then sit down at the beginning of the year. What is your vision for your business? Did you achieve your goals? What unexpected opportunities did you encounter? I hope you're writing these things down. These questions, the quick thoughts that happen, these ones where you weren't expecting this and you're not as guarded. Write down those first things that come to mind and think about them later. What unexpected opportunities did you encounter? Were you able to act on them? Did you let those go by? Were you prepared for them? They were unexpected, but that doesn't mean we can't be ready to expect the unexpected. Okay. What unexpected obstacles did you encounter? What was it this year that totally threw you off, that destroyed your whole vision, maybe that was an illness in the family. Maybe that was some COVID regulation wherever you're at that you thought would go away and didn't. What obstacles did you encounter? Did you overcome them? And how did you do that? Because there's going to be more next year. This one's really important. Did you enjoy your business more or less than you did 12 months ago? Was it more fun, or do you dread it more? Your business can be the greatest, most fun tool, hobby that you have, and it can be the most horrible taskmaster that change you and takes away all the freedom that you thought you were going to get. So over these last 12 months, did you enjoy your business more or less? Last question then. What have you decided to change about your business? What's different? Is there a tool that you need? Are there things that you need to get rid of? Is there staff that you need to change? But this last question really speaks to the first one. What were your goals and did you achieve them? If you didn't achieve them, why? And what do we need to change so that you can achieve your goals? And maybe that's just you need to change your goals, right? Maybe there's some things that you are super excited about and you've realized they don't matter anymore. Okay, so I'm just going to take just another few seconds. I want you to think about these. I want you to write down your first thought. Don't dig too deep because you were unexpected. Your guard is down. Or hopefully you were able to be a little bit more vulnerable with yourself than normally. All right. So we're going to go over the 3 major financial statements. Yes, they all matter, and there are 3 of them. If you go to your doctor and he just gives you just checks your pulse, that may or may not be good. He may or may check your blood pressure. He may or may not check your heart, but he does all of those because they all speak to the overall picture. We're going to go through the 3 major financial statements and how they should be, how you should look at them, things you should be looking for. And your bookkeeper, whoever's working with you on this is something that you should do with them every month. A review of your financial statements. Are we getting where we want to go? Our time to adjust right now for 2021 is pretty slim. There's not a lot left we can do. But if you're checking in every month or every quarter, you've got better time to respond and to adapt to the changing environment. And we're going to look over some of those things that you can start seeing. Okay, so let's just define those 3 statements. The first one that we have is the balance sheet. Okay, the balance sheet simply shows our assets, our liabilities, and our equity, which is really simply what we own, what we owe, and what's left over. Okay, the balance sheet is super important for your banker. If you're considering expanding next year, or looking for investors, or if you're just trying to figure out what your business is worth, your balance sheet is really key to understanding the assets of the company and what part of that is left for you. And depending on your business, this can be wildly variable. If you have a lot of debt, you could have a ton that you own and a ton that you owe and have very little left over. If you've got a very low debt business, low inventory business, you might have a tremendous amount of equity relative to your business. And that's great. It just, every business is different. You'll have to look at your business. Okay, your income statement. What did you earn this year? What were your sales? And how much did it cost you to get those sales? At the end of the day, that's what it is. Some people call it a profit and loss statement. You can't have a profit and a loss. So we call it an income statement. But it really goes down to what did you earn and what did it cost you to get there? Okay, the accountant and the government really care about this one because that's what you pay taxes on. They want you to pay tax what you earn. The statement of cash flows, though, is the most important for you, the business owner, because that's what cash came in, where did it come from, and where did it end up going? At the end of the year, what matters to you is cash. Unless you're trying to run a business for taxes, which is not a very good long sustainable business, or because you want to take care of the government, which there's other ways to do that. The cash is the final say. If your cash is going up, you have a good business, generally speaking. If your cash increases every month, you have a good business. Look at Apple and how much cash they've accumulated and what it can allow you to do. Cash is just so important. So we're going to go through how to get those statements and talk about it. So let's start with the balance sheet. All right, I have opened up QuickBooks Online. This is the main screen. You will see it. This is a sample company that I'm working with. So the numbers aren't completely 100%. It's not going to match your business, but it does give you an idea. So we're going to come over here to the business overview section, and then we're going to click here on the reports. All right, first things off, we're going to start with the balance sheet. We're going to click here on our balance sheet, and it shows as of today, which is fine. But what we want to see is how are we doing over time? Okay, I don't have enough time to go through every single thing that we could be doing. I've done a presentation on understanding your balance sheet, but we're going to come through. We're going to shrink some of these things because we're not going to go in depth into all that's here. Okay, so this is our balance sheet. We've got our bank accounts, accounts receivable, other current assets, truck, fixed assets, accounts payable, credit cards. So here's what we got. There's all of our information. Okay. Now, then what we're going to do is we're going to change this, and we're going to change the dates. You really want to compare at least 3 periods. Okay. We're going to make it the end of the year. So if you're going to look at historical, or you're going to look at do 3 months, 3 quarters, 3 years, whatever that looks like for your business and how fast you need to change. If you're a relatively new business, months. If you're more established business and you're not growing as fast, quarters or years is probably better. In this case, we're going to do 3 years. Okay. So we changed it to 3 years from 2019 to 2021. It's not broken out. We got to come over here to display columns by year. Okay. Now when we run it, we've got all of the accounts. Again, we're going to shrink this. Okay, we've got all of these major accounts for the last 3 years, and we can start looking at this and looking at trends. If this isn't something you want to look at, you can hit here and export to Excel, which is super useful, but would take too much time for us to do here. Susan Tonages last month gave a great presentation on how to do this, how to get these reports in Excel, and some great things that you can do in Excel. I'm not going to talk about that. I'm just going to stay within the software. Okay, so we've got our bank accounts. One thing that I see is our bank account balance right here is going up every year. That's phenomenal. We're getting additional cash. Our accounts receivable, though, was great in January. We kind of were consistent the last 2 years, but now this year, our accounts receivable is high. It's 5 times what it was in the previous 2 years. This is the time where you ask yourself, why? What changed? What happened that I didn't collect money that I was owed? Or have we been paid that and it's not getting categorized correctly? And so we're double counting our income. So this is a good test to look at. How do we look compared to the last 3 years? Do we expect these changes? Maybe, yeah. So then our other current assets, we added a bunch of that last year. That's a lot of inventory. Again, these are sample books. But hey, we wanted to really expand, and so we moved we bought up a bunch of inventory. So our current assets have gone up quite a bit. Okay, so you can see that trend. Hey, our current assets are going up. Remember, counting equation, assets is what you own. Okay, that's what we're talking about. These are all the things that I own or that I can control. Okay. If you wanted to learn more about the balance sheet, again, there is another Grow Nebraska webinar that I did. The other thing that jumps out at me is we got this truck here. We bought a truck last year in 2020 for $13,000, and we still have it on the books this year, but there's no depreciation here. There's no depreciation recorded on the books. which means that I didn't talk with the accountant about it. He may not know I bought a truck, which means I lost some money because I paid taxes on more than I should have last year. And it's the exact same amount. Did I get any new equipment purchased? Recorded. And do I need to get those depreciation entries from last year recorded? Okay, so that's just something to look out for. These numbers being the same is concerning to me. Okay. All right, now let's move to liabilities. Our liabilities is just simply what we owe. Okay, so our current liabilities, we've got credit cards, we've got notes, we've got accounts payable. This is going up too. I don't know that I like that. What we owe people is increasing. Now, maybe that's because our business is increasing, and so that's just the way it is. But we just want to be on top of that. We definitely, our accounts payable went up, but our accounts receivable went up way more. This is a problem in the future, right? This says that I'm still paying my people on time, but my clients aren't paying me on time. And that will cause you problems in the future, okay? You do not want your accounts receivable to be increasing faster, to be getting bigger than your accounts payable if it's consistent. So the next thing about our credit cards, that's pretty consistent. Other current liabilities, we got here this loan payable. It's just increasing about $4,000 every year. Why is that happening? Why are we pulling out a loan every year? And I got to go faster. Okay, so then long-term liabilities, we're adding a lot of financing. So our balance sheet looks great. Our equity was looking great, but now we've got all this debt and now it's negative. Okay. And we pulled out $5,000 out last year, and we pulled $5,000 out this year for me, for the owner's draw. But that's one of the values of having a business. Our equity was small in 2019, got a lot bigger in 2020, and then this year we brought on this additional debt. There were some other things that happened that now we've got a negative income. So that's the balance sheet. Those are some things that you want to look at for 2021 to see how is the business performing. At the end of the day, is my cash increasing and is my debt increasing at a level that I wanted or need for whatever my plans are? What is my vision? Okay, we're going to come back here and we're going to go to the profit and loss that QuickBooks calls it. But again, we're going to call it the income statement. Okay, so January 2019, and we're going to separate this by years. Okay, and again, this is recorded. So if you missed anything, that's okay. You'll be able to go back and rewatch this. Okay, so now let's look at our income statement over the last 3 years. Okay, just kind of want to get some of this simplified here. Again, this is sample data, and so we don't want to go too deep into it. So let's start looking at our income statement. We had great sales in 2019, doubled in 2020. What the heck happened in 2021? We have not been selling as much. Our accounts receivable are way up, but our sales aren't up. Things aren't quite working right. We've got $10,000 here in overall sales. Does this mean that we rotated out? That, hey, our business has changed and we've done a lot more in other areas? We're getting out of design. What is our goal for the business? There's a lot of these little ones that we're doing pest control all of a sudden, and we're selling some kind of products, and now we're having to give discounts. Are those the things that we want to see in our business? Maybe yes, maybe no. Maybe we're bringing family back in. We want to diversify. Whatever it is, it's just something to be aware of. The other thing though is, so cost of goods sold, we're going to kind of ignore that right now and look at our profit number here. So we had good profit 2 years ago, amazing profit last year. This year, it's okay. After it was about the same as 2 years ago. What happened? Again, did we step back from the business? Was that too much? Was it too crazy? We got burned out and we had to back down. Okay. Advertising expenses. Whoa, this jumps out at me right off the bat. We spent $100 in 2019. We spent about $100 this year, but last year we spent $1,500. If that was the only thing that we changed, we spent $1,500 and added $5,000 of revenue, of profit, not revenue, profit. Hey, That's probably good. That's probably advertising money well spent. We need to find out who that was and see if we can double down on that and do more with that advertising because it had such a big effect. That was a totally worthwhile expense. Okay. Let's kind of keep scrolling down here. Our equipment expenses in 2019 were really high. It seems like maybe we got that figured out. Maybe there was a lot in automobile or gas. We got those things figured out because these last years have been more consistent. Okay. Legal and professional fees, that's staying pretty flat. Maintenance and repairs have kind of gone up over time as our business gets older. That's not unexpected. Our rent has gone up. Maybe we went to a bigger place. So we can kind of see our expenses over time and see our net operating income. This is our profit. Okay. That net operating income, after all the business is done, that profit, that's what you get to keep after the government takes his part of that profit. Okay. So we've got $5,000 2 years ago, $10,000 last year, and only $5,000 this year. Again, man, that advertising, that had a big impact. We need to look at that. We did have, some miscellaneous expenses that we didn't know what they were. We couldn't remember. They're still part of the books, but we don't know what they were. So that's still coming off the bottom line. We can see we made good money 2 years ago, better money last year, and this year our expenses were down, so we're still technically profitable, but not as profitable as we were before. And if we take $5,000 out this year, we're going to actually go negative. Okay. So there's your income statement. That's how you can look at your income statement and start seeing trends. What's going on in my business? And do I like it? Is it taking me where I want to go? There isn't really a right or wrong. The question is, does it get me where I want to go? What is my vision for my business? Okay, so then the last report, I told you the statement of cash flows. And if you are not going over this with your bookkeeper, you need to find out why, because it is ultimately what's going on in your business. Are you making the money? Where's the cash going from? Okay. So we're going to simplify this and just really make it tiny. Okay. Operating activities. This is the business, and your net income is a great number, but it's also kind of a lie, right? It's not entirely true because your accounts receivable, that shows up as income. That shows up against your profit, but you never got cash for it. So we've got a lot of cash there. I think it was $8,000 of sales that never turned into cash. So there's $8,000 that we might be looking at our bank account going, hey, where's this cash? And it's not there because we haven't received on it. Okay, so what this does, this adjustments to reconcile, this says, okay, well, we're gonna even shrink that. Okay, so from operating activities, I like it. Okay, so adjustments to reconcile, meaning that we're showing expenses on our net income that we didn't actually have on balance. So our business actually produced $9,000 of additional cash. And last year it was $12,000. This year it only produced $1,000 in cash. This is not the trend we want. This is bread and butter. You can borrow cash all day long, but ultimately this net cash provided by operating activities, that means, did the business pay for itself? Did the cash coming in cover all of the expenses? Okay. This year it was close. And maybe we were expecting that, but this year it was close. Okay. Investing activities. Last year we pulled $13,000 of cash out, almost $13,500 to buy that pickup. Okay. So then that's what this investing is. You're buying equipment for the business. And that's important because the cash left, but hopefully you're going to be able to do more with the business. You're pushing that cash, you're rolling it over into something else to make the business better. Financing is pulling in cash to hopefully make the business better. It's also where your owner's equity goes. So we've got this $5,000. That's because we actually pulled $5,000 of cash out of the business. So the business made $5,000. It had cash increase of actually $9,000 because a lot of those expenses were notes that didn't happen. But the cash increase left in the business was only $4,000. That's all that was left in the business after we took our owner's salary. And this is a sneaky devil, because as you're pulling money out of the business throughout the year, it's hard to keep track of it and know what came in and how much came out to you personally. So looking at that cash, you say, well, I made so much money. Where is it? A lot of times the culprit is in owner's draws. You pulled more out of the business than you thought, a little bit here, a little bit there. And whether it needs to be intentional. There's not a right or wrong answer as long as it's what you intended. Then in the next year, January, we took out $5,000 in 2020. We took out $5,000, but we got those notes, and so we added $3,000 of cash. Okay, so we still increased cash, but we got a note, right? And then in this year, 2021, we've added another $2,000 of cash. So we've added $4,000 of cash. Now this $10,063 should exactly match our balance sheet. I'm not going to go into all that. We'll do that another time. But that is understanding your cash flow. The key to it is being able to get the cash and understand where did it come from and where did it go. These all three financial statements are important to review for sure annually. And now is a great time to be doing it, because you can review the year before it's done and make sure that you've got all your ducks in a row so that you can meet with the accountant and go through what options do I have. If I was this profitable, am I going to have a tax liability? Is there some equipment that I should buy? Is there something that I should do because because I was profitable? Is there something that I should be doing to maintain that profit? Are there some expenses I could take? Could I contribute more to a 401k? Okay. Those are those questions that we can deal with now, that after the year's over, it's a lot harder to do. Okay. All right. So we're back in our presentation, sort of. We're back in our presentation, and I want to go over the end of year checklist. Okay. So as you're preparing for the year end, these are things that just so easily get missed, especially if you don't have a bookkeeper. Don't forget your out-of-pocket expenses. There are things you bought on your personal credit card this year that didn't get recorded on the books. And there are things that the business paid for that are personal that you kind of forgot about and need to get checked. But really, it happens a lot more often that you paid for something with a personal card and didn't get reimbursed for it. That's a lost deduction. That's something that should be showing up on your expenses and isn't. If you're traveling for work, or if you have an office home and an office, or a home office and then an office you drive to, get your mileage log put together. Get as much of that as you can. That is a deduction that is worth it. You've got to do it, and it's so easy to get lost. Find an automatic mileage tracker. Take a notebook in your vehicle if that's what you got to do. But there's so many lost expenses that you could be writing off that you just don't, if you don't have a good record for, you're going to miss. PPP loan forgiveness. If you got that and it got forgiven, you do have to record that as forgiven. We're not going to that now. Talk to your accountant, talk to your bookkeeper. That should be, I have my clients, we're putting it in as an other income PPP loan forgiveness. So it does show up as income because technically it's income when a loan is forgiven. But by putting that other category, it doesn't get confused with your true sales income. And you can show that to the accountant and say, this is the PPP loan forgiveness. It's not taxable. And they can differentiate that, but you've got to show it, and you can show where it is, and you put in the date that it happened. Okay. There is an employment tax credit for employee retention. It's not my area. Talk to your accountant about it. That's just really, really important. The other thing to keep track of that I didn't get recorded in here is, are all of the deposits in the bank account sales deposits? You do not want an owner's contribution to the business to be counted as sales, because you have to pay taxes on sales. You don't pay taxes on owner's contributions. So if there were any, you just need to go through that deposit report. And if those sales look too high, or if you're like, hey, where's that deposit I made? into the business, just it's so easy for those to get categorized as sales when they're not. Okay. Last thing you need to do is you've got to meet with your CPA. Okay. Schedule an appointment, get your books in order for 2021. Do it as soon as you can and try to meet with your accountant before the end of the year so that they can give you some guidance. Even if your books aren't perfect, if you can get them your balance sheet and your income statement, even just your income statement, and say, hey, here's where I'm at relative to last year. Do I need to make any changes? Your CPA will love you. It will make that so much easier. And they will be able to help you in a way that they would love to help you, but usually it's too late. Your CPA wants to help you minimize your tax burden, and we have to be proactive in getting them that information so that they can do that. That's crucial. And if your stuff's not together now, get it together, because it's not going to be any easier in a month. It's not going to be any easier a month after that. You got to get a system. If you need a bookkeeper, let me know. We can work on it. All right. So what did you decide to change? Then act on it. Bruce Lee said, knowing is not enough. We must apply. Willing is not enough. We must do. What are you going to change in your business this year? What opportunities? Back to that thing in the beginning. What opportunities did you want to take care of? What's your vision for the business? I would say number one thing, meet with the accountant before the end of the year if you possibly can. Number two thing, review your statements personally. Review those 3 financial statements. Do I like the story my business is telling me? And after you do that, then you can decide on the next thing. I'm Cory Morris with Morris Better Bookkeeping, bringing peace and joy to small business financials or books. That's my contact there at the bottom of the screen. It was at the beginning of the thing and it's at the end. And I'll probably put it in the comments. I'm looking forward to talking with you. I hope you have a successful 2022.
Awesome. I learned so many things that I didn't know. I'm a little bit slightly embarrassed to even say that I didn't know some of those things, or they're just things I didn't think of. The mileage thing, especially, just like hop in my car, run errands for things, and I'm like, wow.
A lot of those don't get categorized.
Yeah, and my mom's an accountant, so you'd think I'd be better at this. I don't see any questions over in the chat, but if anybody has any questions right now, you could put those in the chat and let us know.
I did just add my email if anybody has any questions that they wanted to ask privately. It's easy. You mentioned that there were things that you learned. Most business owners are not in business because they like looking at their books or their finances, and it can be scary to ask questions that are around your finances. So if anybody wants to email me privately, there's no judgment. There's nothing that I haven't seen before. We're all learning.
Yeah. And so, Cory, do you just want to tell us a little bit more about yourself while we wait to see if anybody else has any questions and what you do?
Yeah. So Morris Better Bookkeeping's about 2 years old now. My big passion is budgets and your money doing what you want it to do for you, and helping business owners to do what they want to do using their business. A lot of businesses start off exciting and fun, and then they grow and they take over your life. And a lot of that comes down to finances, not knowing if we're making enough money, not knowing if we're spending the money right, not knowing if we can slow down. So those are things I help with. When I meet with clients every month, we go through their books, where they're at, are they reaching their goals, and they can go from hating their books to loving their numbers. That's kind of that's what I really do. It's all virtual, so I can work with anybody in the state. About half my clients are actually not in Nebraska, so.
That's really exciting. So if they really don't want to do it themselves, they can just come right to you. And absolutely. You are currently open for new clients?
Yep. I've got room for a few more new clients.
Awesome. So they can just reach out to you at your email, or you have a website, right?
It's under construction, so it's really ugly.
Oh, that's all right. That's all right. Awesome. Then he put his phone number in there. That way we make sure we have all of his contact info. Well, I guess if nobody has any questions, we'll probably sign off for today, but you can always just email him your private questions to, I know finances can be awkward to talk about in general all around. So feel free to reach out to him personally. I'll include his email with the recording of this webinar that I send out here in just a couple hours. That way you'll be able to reach him personally as well. Did you want to say anything else?
Yeah, thank you to those of you who came and watched, and I hope that you got something useful.
All right. Thank you, Cory, for being on here with us today. And thank you, everybody else, for tuning in. We do have some other upcoming trainings. I was just going to plug in here real quick. We do this the third and fourth Thursday of every month. We do different topics. You can always find those at our website, grownebraska.org. You go under the trainings menu and you can sign up for any of those trainings. In January, we have one that is called Stop Spinning Your Wheels. And so you can learn some more about that by going to the page on Grow Nebraska. And then the other one is on January 27th, we have creating a social media plan you can stick to. And so you can just kind of learn more about that social media stuff and creating a plan for your small business that is easy to stick to, because just like finances, social media can become overwhelming. So thanks everybody for attending, and we will look forward to seeing you at more trainings in the future.